I think the RBI is communicating to markets via the various mechanisms that they have announced, various instruments, OMOs, BRRs, etc., the FX swaps. So, given the multiple instruments that they are using, to communicate to markets, to telegraph to markets that RBI is going to provide the ample, sufficient, adequate liquidity in the system, whatever is needed in the system. So that I think will enable transmission. If, as you're saying, markets or banks front run this and actually reduce rates faster, that's actually good. Yeah, we need a front loading of rate cuts into lending rates or deposit rates, etc. So that's actually good if banks, NBFCs, other financial intermediaries cut the rates faster than what the repo rate is signaling. That's actually good. Remember, for some time, the short-term call rates, other the very, I mean, 3-day rates, 7-day rates, etc., had actually moved closer to the SDF, which is 25 basis points lower than the repo rate. Yeah, it's again beginning to move towards more towards the repo rate, but it had actually come down. So the borrowing cost, short-term borrowing costs, which banks need to maintain the structural limits. I mean, 1-day limit, 7-day limits, etc., that RBI prudential norms dictate. So that actually reduces rates in those buckets closer to the SDF rates. Yeah, so even lower than the repo rate. So which is actually good.